Good evening and welcome to the Earnings Review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from Hampton Studios in Harare, Zimbabwe. I'm Ibn Mabunda, your money man. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with the most competent analysts on the market just to ensure you're finished with relevant and comprehensive market analysis. Tonight, we focus on Bindura Nickel Corporation, Zimbabwe's largest nickel producer. Now, this is the only nickel producer on the continent with a fully integrated nickel processing facility. Let's take a sneak peek into their timeline to understand how the firm has fared over the years. 1956 would mark the discovery of nickel deposits in the then southern Rhodesia. 1964 would mark the completion of the production of the first nickel concentrate from this very part of the world. 1966 would see the establishment of a nickel smelter as well as a refinery. 1968 BNC was established under the Anglo-American, and in 1971 the firm went on to list on the local bourse. 2003 Anglo-American went on to dispose of its shareholding to Wana Africa. The years that followed, particularly 2008, the smelter and refinery was put under care as well as maintenance. 2012, following a recapitalization exercise, BNC resumed underground operations at the Trojan Mine. 2015, Wana Africa was renamed Asa Resources in the reflection of a change in the shareholding of the very firm. 2019, Wana Africa, now Asa Resources, went on to dispose of its shareholding to Sortic International, which is a firm that is incorporated in Mauritius with operations here in Zimbabwe. For a moment, let's zero in on the operations of the firm. BNC, as I mentioned earlier, is the largest nickel producer here in Zimbabwe, producing over 6,500 metric tons of nickel per annum. The firm has four key assets, which are the Hunters Road Trojan Mine, the Shangani Mine, as well as the Bindura Smelter, as well as refinery. The Trojan Mine would be the firm's main asset and is located 90 kilometers northeast of Harare in the town of Bindura. The smelter, as I mentioned, would also be a game-changing asset. The smelter is actually undergoing refurbishment and is at an 83% completion stage. What's complete? This smelter is expected to create value, as this will allow BNC to produce nickel sulfate, nickel cathode, as well as the cobalt sulfate. Of note, if we are to take a look at the very nickel market globally, we would actually realize that stainless steel currently accounts for over 65% of the global demand for the metal. The electronic batteries would come in at a mere 8%. However, with a booming EVs market, it is expected that electronic vehicles would actually account for a significant chunk of that global demand. Elon Musk is on record for having said that nickel is the next gold. Now, according to Acumen Research, the EVs market is expected to balloon to over 550 billion United States dollars by 2026, growing at a constant annual growth rate of over 26% from a figure of $100 billion in 2019. Notably, Zimbabwe is Africa's fourth largest nickel producer, producing over 19,000 metric tons annually. Some vital stats where Bindura Nickel is concerned: with the current share price of over 330 cents, the firm has a market cap of over 4 billion Zimbabwean dollars. The stock has surged over 200% since January to date, vis-a-vis a materials index that is up over 700%. Comparatively, the ZSE All Share has surged over 600% since the year started. A key shareholder in the firm would, of course, be the Sortic International, with a 75% shareholding in Bindura Nickel Corporation. Now, this concludes the highlight section of our show tonight. In just a moment, we get into an analysis of the firm as well as an exclusive conversation with the Group Managing Director, Batirai Manhando. Now, don't go anywhere.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.
Now, joining me on set to discuss the operations of Bindura Nickel is our Chief Analyst for Equity Access, Respect Kwenzi. Respect, good evening and thank you for joining us on the Earnings Review.
Thank you, Eben. It's always my pleasure. Good evening, viewers.
Fantastic. Now, of course, this conversation is coming shortly after the publication of the 2020 full-year results for the nickel miner with some interesting details that are worth taking a look at. But before we get into the analysis, let's just have a look at the Chief Executive or the Managing Director there, Batirai Manhando, shedding light in terms of how they performed over the full year to the 31st of March 2020. Let's have a look.
I'm going to take you through the overview of what the company went through the year. In terms of highlights, in terms of our financial highlights for the year, we managed to sell just under 6,000 tons of nickel at 5,685 tons, and this was a 11% decrease when you compare that to the prior period. The revenue went down by 3% to 52.4 million compared to 54 million in the prior year. We got an increase in terms of the nickel price received. The nickel price went up by 8% to an average of $13,919 per ton of nickel compared to $12,885 per ton in the previous year. We did spend just over $5 million in capex in the year under review, specifically to replace underground equipment and also to continue to deepen the mine through the RIDI project, which we are undertaking, and we hope to commission by the end of this financial year or early in the new financial year. Operationally, production went down 9% to 5,720 tons nickel compared to 6,289 in the prior year. This was principally driven by a reduction in grade when you compare the two periods. The business model continues to be the blending of both the high grade and the low grade ores, and supplying the mill with a blended material of between 1.5 to 2%. But as you see that the head grade for the year averaged about 1.53 this year. In terms of the projects, the project of main interest, the smelter project, has been on hold for quite some time now. It's where we were last year, and our advanced reasons to that in detail at the end of the project, at the end of the presentation when I talk about projects. That slide just shows you in terms of trends per quarter on what we were milling and the production and sales numbers. And below that, you can see the efficiencies, which is your recoveries and your all-in sustainable cost and the head grade. I think important to see that in terms of tons milled, we went down as I specified earlier on, and so did we go down on the sales, and the head grade also went down from 1.64 to now 1.53 for the current period under review. Recovery was stagnant at 86.3%, mainly because of improved efficiencies in the plant. Normally, when your head grade goes down, the recovery should go down, but this time it was almost maintained the same as the last period because of improvement in efficiencies in the plant. The all-in sustainable cost went up from $6,610 per ton of nickel to $7,600 per ton of nickel, mainly because of the cost regime in the country, whereby most suppliers of our inputs were sourcing currency on the parallel market and then pricing it back to us at exorbitant rates in terms of what we're buying for the inputs. That pushed up our cost of production.
Right, there you have it, respect a profit position of just below $1 million United States dollars vis-a-vis a revenue figure of 52 million United States dollars. Can you give us an analysis in terms of your assessment of how they have fared over the past year?
Yes, so it's not been a very good year, but the company did try to manage, obviously, its revenue aspect as well as its costs. But I think looking at the top line there, the decline in terms of sales tonnage was also a result of a dip in production. So production levels were quite lower compared to last year. So it ended up affecting the overall turnover or revenue levels. But the obtaining prices in the market ensured that the dip in terms of tonnage does not get to affect the overall collected or overall end revenue. So the revenue levels, they were just slightly lower compared to the dip that the company realized in terms of sales tonnage. So that's what shaped the overall production levels, the overall sales performance levels. But looking at the cost aspect, there was an improvement in terms of all-in sustaining costs per ton. I think this is one key metric, because whenever you get to reduce your all-in sustaining costs, you give enough headroom or enough growth in terms of profitability. So it also ensured that they achieve that $1 million USD profit as they reported in their results.
Now, Zimbabwe, of course, is a key player on the continent in as far as the production of nickel is concerned. How much of a role does Bindura get to play in that regard?
Yeah, looking at the nickel market in Zim, it's one of the biggest players in there. Of course, you have some other PGM producers who also come in and improve in terms of the tonnage that's realized from nickel production, but they are the single largest integrated nickel miner in Zimbabwe and also in Africa because of the smelter and refinery. So obviously they are quite integral in terms of shaping the outlook in terms of Zimbabwe's economic growth.
Now let's talk about one of the key issues there from that very presentation. There would of course be an issue to do with the bond payment to the bond takers there. Can you shed light in as far as that very development is concerned?
Yeah, so in 2015, BNC undertook to finance the restart of its smelter. So they went into the market looking for 20 million out of the 26 million that the company wanted in order to restart that smelter. So they managed to raise that capital and they started work on the plant, and 83% of that work is now complete. But over the past 2 years, they have suspended construction of that smelter. But in terms of payments to bondholders, they have been consistent in terms of their payments. But in the first year, they were supposed to pay after the first 12 months. And payments only started coming in a bit later than the first 12 months. So that delay, obviously, it unsettled some of the bondholders. But getting now into the successive years, this bond should have been repaid according to bondholders in USD. But legislation changed, and legislation demanded that all debts that are due to the local market should be paid at a local 1:1. So what that means is the cost or the bondholders' money that was given to Bindura is now being paid back in terms of the current legislation of this country, which is at 1:1 to the Zim dollar. So obviously that also fizzled out some sections of the bondholder community. But the law is what it is. This is what's demanded by the law, and you can't be seen to be breaking the law. And that's been the contentions there. I think it's also at the discretion of the company now that legislation has been slightly relaxed to say you may also settle your debts in terms of USD. But they are up to date with those payments, and obviously bondholders might have concerns, but the company is up to date with that smelter.
Now, I'm sure the investor as well as the analyst would want to get perspective into one of the key standouts from their figures, one to do with the restatement of their financials, as well as an issue to do with a tax issue that remains pending as at this point.
Yeah, those are technical issues that are mainly an implication of accounting procedures, and some of these were identified at the in the 2020 financial year. So they caused also delays in terms of publication of the results. But some of the matters are now clarified. I think that's one of the reasons why we saw that delay in results. Results had to be posted to third parties in South Africa who had to do some further due diligence on the results. And we also had a new shareholder coming on board. They wanted to get to the grips in terms of what the numbers really look like. I think all these are part of the housekeeping issues, especially now that there's a new shareholder. You would want to do things differently. You would also want to ensure that your books are a fair reflection of the underlying business that you are running or owning. So I think these are some of the issues raised there, and some of the outstanding issues. Hopefully they get to be addressed in the near term, so as to boost confidence in the market, which I feel is not really at its best.
I'll need us to elucidate with that subject of the new shareholder coming on board. In just a moment, we take a break, and when we come back, we'll have a look at an exclusive conversation we had with the group managing director. Don't go anywhere. Now, by the sidelines of their results presentation, we had an exclusive conversation with the Group Managing Director, Bat, who gave us insight into some of the key issues playing out where Bindura is concerned. Let's have a look.
The main drivers of this performance in terms of the reduction of the revenue was actually that we sold less than we did last year, which means we also produced less. And it was mainly driven by the fact that we mined and milled a lower grade material than we did last year. That was the main driver of the performance, which fits in well with our flexible model in terms of if price goes up, we can blend the low grade and the high grade and then feed the mill. So depending on where the nickel price is, we can then vary the proportion of high grade and low grade to achieve what is optimal for the business. Our business model relies heavily on mobile equipment underground, and most of the equipment is now obsolete. So we've got a capex or capital replacement program which we follow, and most of that money went into buying dump trucks, into buying LHDs, into buying rigs, and also part of that money was to advance the shaft redip project at Trojan, which is the future of the mine in terms of increasing the life of mine. So that's where the bulk of that 5 million went. It is very strategic. Put it this way, if you don't deepen that mine, then you can't access lower grade ore. Or you can't access higher grade ore, which is at the bottom levels.
Right.
What's happening with, we are blessed at Trojan because we're seeing that the grades are actually going up with depth. So it's important that you deepen, and we have deepened the mine. What is now left is to equip that shaft Then we continue to do further exploration underground and as I speak, the massives, we haven't reached the bottom of them. They continue to be open-ended at depth. So we'll continue to do exploration. We're actually working towards another redip after this one because the ore body continues at depth, like I'm saying, and it's higher grade. So that will extend the life of Trojan nickel mine by this redip was going to extend by another 5 years. If we do another redip, we'll probably gain another 5 years or more. So it's quite strategic for Trojan in the sense that that's the life of the mine, and also you're getting much higher grades, which makes Trojan a world-class mine. That is very important for us as a business because the main demand for nickel at the moment is for stainless steel production, which is what you see in all your construction materials, all these buildings use lots of stainless steel. That has been the main demand for nickel. Now, with what's happening with these electrical vehicles you have just spoken about, and all these car manufacturers being bullish about producing EV electrical vehicles, that's going to add demand for nickel because the stainless steel will still be there,
right,
and growing. Then you have added demand with these electrical vehicles because it's actually, if you look at what Europe has done, people have been given limit to say above this you can't have these emissions, and because of the environment, this electrical vehicle is coming in and it's going to be I think it's going to be a standard vehicle across the whole. If you look at, you just mentioned China. China is quietly manufacturing these vehicles
quietly
to address this environmental issue, because it's a big issue in China, actually, this environmental problem in terms of pollution. So they actually advanced, probably more advanced than Europe in terms of developing this technology and manufacturing the cars. So and if you see Europe will take, so demand for nickel definitely is going to be high because it's a major ingredient in the batteries which are used for electric vehicles. And like what the Tesla CEO said, that nickel is going to be the new gold.
Right.
Because the demand is going to go up, and because of that, the price will go up. So I'm quite optimistic and bullish that this smelter and even the refinery, we're going to refurbish these and restart them in the not too distant future. And the price will go up, and it will allow us to have a business model where we value add to the end. We don't just export a concentrate, we actually get metal, get cathode. Who knows, maybe we can actually even manufacture the nickel sulfate required for electrical vehicles in Zimbabwe. And you can actually link that to what's happening with the lithium industry in Zimbabwe to say maybe we should have our own electrical vehicles ingredients plants in Zimbabwe in the longer term.
Fantastic. So this, I guess, would pretty much spell your 3 to 5 year outlook, isn't it?
That's correct. That's correct. So you look in the next 3 to 5 years, BNC is going to be different in the sense that we will be having value-added products, and I think the metal prices, not only nickel, you also look even at cobalt. We're looking at copper. These prices will go, and these are byproducts, the cobalt and copper byproducts for our processes. And these prices are also going to go up, and this company is going to look different in a big way.
Do you have interest in terms of solidifying your presence and getting into cobalt and some of these minerals?
These come as byproducts because nickel naturally occurs with copper and cobalt, so they are in smaller quantities. So you can't then pursue a strategy to say, but they will come out as you take out the nickel. So what we're going to do is, we have spoken about Trojan in terms of the RIDI project.
Right.
We are actively looking at Handelsrot. We are actively looking at Dambasilwana, which is close to Shangani. And Shangani itself, if the nickel price goes high, we look at it as well in terms of bringing it back into production. Then obviously the smelter and the refinery, so that we produce a value-added product.
Well, thank you very much, Pat. There you have it, Respect. Can you give us insight into the developments with regards to nickel prices and how this would likely affect the performance as well as the operations of the group?
Yeah, nickel is a very exciting product, really, looking especially at the evolution in terms of the electric vehicle revolution that's ongoing, which is led by Tesla, which is an American producer of hybrid electric cars. It's expected that there's going to be some exponential growth in terms of demand for nickel, which is used in terms of cathode production of batteries that are used in EVs. So obviously against that, it's really expected that in 5 to 10 years, the demand for nickel is going to possibly grow by double-digit figures. And what this means is it boosts the price of nickel. But outside of EVs, you've got other markets as well. Readily, EVs are not the biggest in terms of demand for nickel. So you've got other areas as well where you also find nickel being used in other things. So definitely the price outlook is very bullish in my view, over a scope of 5 to 10 years, 10-year period. So what this means for BNC is it gives them room to capitalize some of their projects, such as the Shangani, which is still in pre-development phase. And they can also restart one of their mines, which has been mothballed for some time now, because the life span of the current mine, which is Trojan, is plus minus 12 to 15. And so obviously you need to start looking beyond a 10-year horizon in terms of the mine life. So obviously with bullish price outlooks, it means companies like Bindura can now start to relook at how to finance a development of these some of these mines, so as to ensure that there is sustained supply in future. So I'm bullish about the price of nickel over a 5 to 10-year horizon, and I'm also confident that BNC has got the resource base enough to meet and sustain current and even better production levels. I think one key dynamic in terms of their production is that they changed the mining plan in 2018. So the new mining plan is such that you get to pick what are called missives, which is areas of either high grade ore or lower grade ore, depending on the market dynamics that you are reading out there. So in times where you really feel the price might be weak and you want to manage your ore, you get to mine in areas maybe of low value produce, and sometimes you get to mine areas of high value produce. So all these can be leveraged in terms of trying to ensure that you take advantage, or you manage the dynamics around global prices. And recently they actually invested in terms of equipment which ensures that they mine certain areas which they were not able to in past years. So that really that flexibility in terms of the mining plan ensures that they take full advantage of all the dynamics, internal or otherwise.
I realize. Just before we go, there is a new investor on board, Sotic International. What does that mean for Bindura Nickel going forward?
Yeah, it would be exciting, especially given the background of some not so good information and developments with the prior shareholder. You would remember Asa Resources, which was mainly a Chinese-driven investor house. There was a whole lot of issues around externalization of funds from Zimbabwe, and the company almost came to a point of insolvency. So obviously with a new shareholder on board, we would hope that obviously some of these housekeeping issues would be looked at. It gives impetus to recapitalization of the entity and recapacitation of some of the production processes, because mining is really capital intensive, and it demands that there's a lot of cash flow that's pushed towards upgrade of equipment. In the past year alone, they expended about 4.5 million in US dollars. So whenever the shareholder gets to be greedy and sometimes push money that's supposed to be used either as working capital or for capital for capitalization purpose, it means that the operation does not achieve its maximum capacity as a profitable or an entity which should make profit.
Well, thank you. Respect for the perspectives. We have to go. As a caveat, Equity Access is, of course, the firm that is running investor relations for Bindura Nickel Corporation. This concludes our show. Don't forget to like, subscribe, follow us on Twitter, Facebook, and visit our informative website, www.equityaccess.net. Remember to catch us every Tuesday, every Thursday, 7 p.m. Central African Time on this very same platform. From the Equity Access team and I, Danky, and ciao.